Welcome to Profiletraders. This is Reza and you're listening to my market analysis for July the 12th. We are looking at a chart of S&P 500 futures contract here, and we can see that we are very clearly in a very strong uptrending market, fueled by a overly aggressive inflow of capital by the Federal Reserve and the central banks around the globe, which was a response to their panic after the Brexit. And that combined with the fact that all the fear of a rate hikes are now thrown out of the window, and also the fact that we are in a mix of earnings season, we have seen an explosion to the upside, and this is more clear when you look at the daily chart. So nobody can argue that so far there is absolutely no sign of any kind of a weakness. This is absolutely on a clear path to go hit 2,200 and eventually a little bit higher, where the upper part of that channel is. However, with that being said, we are now looking at a push up that has gone from 1980 to 2150, which is quite of a colossal rally to the upside, considering the fact that there is not a single corner in the world that you would look at where you are not seeing either a crisis or an economic slowdown or some type of a conflict. And even in our own dear land here in the United States, we are dealing with an average growth of barely 1%, declining corporate profits, declining corporate revenues, and despite all of this, this has been just an apocalyptic market to the upside. As we have approached 2150, we can see that the profile has gone a bit rotational. This could either be an indication of a pause for further explosion up towards 2200, or it could be signaling that we are getting a little bit exhausted after such a tremendous move to the upside. However, in my book, nothing on the bearish side will happen in the very short term prior to break 2138. If 2138 is violated to the downside, we are going to probably come down and tackle today's gap and close it at 2130. And let's not forget that we now have about 4 or 5 gaps to the upside that are left unfilled. Bottom line is that no matter how far they will manipulate this market to the upside, I am a strong believer that once the manipulation is done and over with, because of such a parabolic move to the upside, the counter reaction will be an equally aggressive move to the downside. But as of right now, we are not seeing any sign of weakness. Shorting this market without an initial sign of weakness is pure, complete, total suicide, because there is absolutely no mercy towards the shorts when this market gets into the mode as it is right now to destroy entirely the sell side. So if you are looking for a short, let it break below 2138 first. Once this first sign of weakness is shown, then a retest towards 2145 to 2150 could be targeted for a sell area. But before that, be very, very careful. This is a raged animal, and 2200 could be very easily reached at the rate that we are going. And also do not forget that every single central banker and member of the Federal Reserve is scared to death to see this market coming down, because they know that anything that would jumpstart on the downside could be quite cataclysmic with the effects down, because this is nothing but a silly house of cards being played by the central banks. So they are here very, very strongly supporting these markets on the way up. Now looking at crude, we did have a quite of a significant drop from the recent highs that we did reach, as witnessed on the daily. And once we did break this trend line up, I said that it is very likely that we are going to come towards 44.10. We got very close to it. And then I also warned that we could definitely see a bounce from this level to come retest the trend line. Once we do retest that trend line, which should be reached roughly around 47.30 to 47.50, we should reject back down. On the way down, we are going to come for a retest of this low again. If we do not hold this low, then it should be a free fall all the way to 40. If by any chance on the way up to the retest of this trend line we trade back through 848 and we clear 48.35, this break will be negated and it's gonna be a fake break with a trap in place for the sellers, and the push to the upside could be quite aggressive, possibly towards 50 and then again 52. So tomorrow you are going to get the reserves number out. It's going to be quite of an aggressive day for crude, but keep a very close eye between 47.5 to 48, because that's where we're going to more or less touch that trend line break, and then that touch will tell us if we are going to reject back down aggressively or we are going to trap everyone that is short, trade through 48 and reverse entirely this sell cycle to the upside and go towards 50 to 52. So it's been quite of a challenging market, because every time that markets are so one-sided in one way, it's very difficult, because you have to either jump in and totally forget everything and subject yourself to a chase, or if you are looking for sell opportunities, it has not yet been shown, and you have to exercise patience until you see first sign of weakness before reacting to the downside. In terms of short-term support for crude, 46.20 is support 1, 45 support 2, and then a POC down there at 44.80. On the upside, you already have the number. 47 is 1. We clear that. After that, we do have 47.50, and then after that 48. This was Reza with Profiletraders. Thank you for listening. You wish to learn market profile, check my website. You get all my 5 courses, 5 complete courses, 1 year to my trading room at an unbelievable value of $550 with 30 days money back guarantee. Thank you, until the next time.